The stock market is crashing. Oh my God, no, it's not. But today I'm going to explain to you 11 things that I do on an everyday basis to achieve my long-term financial goals and so that I become wealthy in the future. Now, I know not all of you are going to listen to me, not all of you are going to follow this, but over the years, I've made a lot of mistakes. Financially, I've made a ton of mistakes, and I've taken it upon myself to continue learning. And I think that's what you're doing right now if you're watching this video. So I'm going to go through 11 things that I do every single day to ensure that I'm financially wealthy in the future. What I've found is building long-term wealth is not about luck. It's not about buying that stock at the exact moment and it going up 1,000%, because how are you going to even predict that? I mean, it's like stepping into a roulette table or something. So what I've done is I've created some strategic habits that are helping me not only to be able to take the dips in the market, but helping me grow my financial portfolio. So let's talk about when I first started this out. So I started out, I was saving some money and I hired a financial advisor. Financial advisor took my money and he threw it into some mutual funds, and I left it with them for a number of years, and it ended up just losing money. I lost about $50,000 and I was pissed. So for years after that, I didn't go back into the markets. I just focused on real estate only, and I learned a lot about that. And I'll go through some of that later on in this video, some of the things that I learned about real estate. But the markets were always there, and the money was always sitting in the accounts, so I need to do something with the money other than just buy real estate, because you need to diversify your portfolio. So one of the first things I learned, and what I'm doing every day right now, is I buy stock every day. And I prefer to buy, instead of individual stocks, I buy the ETFs. So you can look this up. One of the ETFs that I like a lot are the Vanguard ETFs. And I buy anywhere between $5 and $10 per day of each one of these ETFs. And let me go through some of them for you right now. The first one is VOO and VOOG. These two ETFs follow the S&P 500. One is a dividend ETF, so a dividend paying ETF, and the other is just following the S&P 500. Another one that follows the S&P 500, not from Vanguard, is SPY. So that also is another one that follows the S&P 500. The S&P 500, if you look at the past 20 years, it's gone up 10% per year on average. It's huge, and it's more than a lot of financial advisors can guarantee you anyway. Some of the other ETFs that I like to buy, because each one of these have different stocks that they buy into. So the VOO and the VOOG and the SPYD are following the S&P 500. Some of the other ones follow just specific technology stocks. Others will follow stocks in different countries like the UK, Asia, that type of thing. So I like to make sure that I'm well diversified. So I buy a little bit every day. So what ends up happening is it's called dollar cost averaging. And if a market dips, I'm still buying in. If the market goes up, I'm still buying in. So if the pattern is just slowly moving up, I'm buying all of the dips, so I don't feel the pain of when there's a big dip happening as much. Some of the other ones, I'm just going to take a look at my screen here, are VHT, which is another Vanguard ETF, VDE, and VGT. Another one that I like is the ARK ETF, so the ARKG. That's another ETF that I like to purchase. And Berkshire Hathaway. You have to buy Berkshire Hathaway. He's a winner, and that stock will always probably go up over time. And when I say over time, I'm talking over a 10-year period. You don't invest into one of these things and expect to gain a whole bunch of money in the short term. I mean, it's possible if you time the market right, but very unlikely. One time that it did happen was during COVID. And so the markets all went down. People lost a ton of money. But if you had bought at that very low point in the market, if you were cash, if you were liquid, you would have made a boatload of cash because it would have tripled most of your stocks. So these I buy into every single day. Like I said, anywhere between $5 US to $10 US per day per ETF. And I buy probably 30 or 40 of them per day. Next, I do the same thing with cryptocurrency. So the cryptocurrency that I like to buy into are the real cryptos like Bitcoin, Solana, Cardano, Ethereum, Litecoin, XRP, and XLM. These are just some of the cryptocurrency that I like to buy. And again, I'm dollar cost averaging these cryptocurrencies, so I'm buying a little bit of it every day, usually between $5 and $10 per cryptocurrency per day. When I see big dips, as an example, a 10% plus dip, then I might buy more of a lump sum of a cryptocurrency or a stock. But crypto can be very volatile. And as I'm saying this, I'm not a financial advisor. I'm not telling you you should go and do this. This is just what I do on a regular basis. Definitely, if you're concerned, contact a financial advisor to go over things. Next, I also like to buy dips on large cap stocks. So at this moment that we're speaking, Tesla is down significantly. Now, Tesla is a huge company. They've got products. They're always innovating. And I've been waiting for a dip in Tesla. So what am I going to do? I'm going to go and buy that dip in Tesla. And I'll slowly buy in. I'm not going to buy 100 grand worth of Tesla just like that. Boom, right there. You might buy maybe $10,000 worth of the Tesla stock at a time as the dip is going down, because it could go down more. And I want to gain if it goes down more. So keep an eye on large cap stocks are the only ones that I like to invest in. I don't like to invest in any of the smaller stocks. I invest in things that I think are going to rebound most likely. The next thing that I like to do every single day to become financially wealthy is I invest 30% of my paychecks, minimum 30% of my paychecks immediately. So I get my paycheck, I cut 30% out. I put that directly into my savings and then start investing that money somewhere. That way, I'm slowly accumulating. I don't feel the money in my bank account saying, Sean, let's buy something. Instead, I'm buying things to secure my future and my children's future. This way, my money's working for me instead of always sitting idle. One thing I do like to do with it is buy dividend stocks. So sometimes I'll buy a dividend stock and it'll pay me monthly, quarterly, or annually a dividend. So I'm actually getting paid to invest. So my money's going into something. The stock may slowly rise over time. So I'm getting some perceived value from the stock going up over time, but I'm also getting a monthly, quarterly, or annual income off of it, which is fantastic, and it can then be reinvested. So your stock portfolio is always growing. Another really important one, and something that you should do today, is create a number in your head that you feel like you can invest. For me, that number is $2,000 every single month. I invest and this is over and above my 30% of my paycheck. I take 2 grand out and it's automatically invested for me every single month. I have it auto debited from my account so that I just don't miss it. On the first of the month, it comes out at the same time as your mortgage or your car payment might. That's your investment into yourself every single month. So if the number for you is $200, then the number is $200, and that will grow over time if you are doing some of the things that I talk about in this video, like dollar cost averaging into ETFs or buying dividend stock. With that money, your money will continue growing. And eventually you'll get to a point where the money coming in is so much, it's like a salary paying you. It's freaking amazing. And this will help you just build wealth passively. You don't touch this money. You don't say, oh man, I'm making 2 grand a month off of dividends. Maybe I should spend some money. No, leave it there. Let it grow. This is your retirement fund. And when you see it at a certain point in your life in the future, you're going to look at it and go, thank God I did that. And you'll get used to the money coming out of your account every single month. So it becomes just a part of your bills, just like your mortgage or your rent or whatever. Now me, I like rental property. I always like to make sure all of my rental properties are tenanted. If you don't have rental properties yet, you may want to consider getting a rental property in the future. But if I have a unit that doesn't have a tenant in it, that means it's not providing money. So I need to place those ads to try to find myself a good tenant. I'm always looking for fix and flip properties. At the beginning of this year, I bought a fix and flip property. It was a half duplex, and I made over $75,000 on this property in 2 weeks. It was unbelievable. So I took possession of the property. We renovated it, painted it, fixed drywall, baseboards, flooring, new kitchen. Did this all in 2 weeks, and it sold immediately before it hit the market. So I'm always looking for these fix and flip properties. I'm also always looking for rental properties. I like to purchase multifamily rental properties. One of my preferred things, and one of the ones that I'm doing right now actually, is I bought a side-by-side duplex. I am going to be turning it into a fourplex legally. That will add value to the property for one, so equity into my pocket, and I'll be able to rent it out to 4 tenants instead of just 2. So that creates an income for myself, and over time, if I accumulate, enough of these properties, uh, when I retire, I'll have an income coming in, and that's my dream. So you always want to maximize your return while keeping the risk manageable. And there's not that much risk in a rental property as long as you're doing your due diligence. I mean, vetting those people, making sure that the tenants are good, or at least trying your best to make sure that the tenants are good. And one of the most basic things that you need to consider is pay your credit card off every single month. Pay it off. If you can avoid paying interest, then absolutely avoid paying interest. It's a waste of money. It's like you taking your money and burning it. Where it's okay to pay interest is if you need to buy a fix and flip property and you're going to make 40 grand on the property and it's going to cost you $1,000 a month in interest for a mortgage or a line of credit or whatever you're buying it under. That's the only time when it's worth it to pay interest. So if you're carrying a credit card balance, focus on paying off that credit card. I also like to create evergreen content. So evergreen content is content that's going to be on the internet forever. It could be a blog on my webpage that drives people to my website. It could be a YouTube video like this one. But I like to create evergreen content so that the content is there forever and it's relevant forever. And that's what evergreen content is. So I don't have to keep creating all of the time, so that people are being driven to my website, they're being driven to my YouTube channel, and I'm getting phone calls because of this. And I like to also increase my business every day by a certain percentage point. So I like to do anywhere between 10 and 20 cold calls per day to new potential clients. If I'm consistently doing that on an every single day basis and my competition is not, I'm absolutely going to grow faster than them, even if I'm a... So smart financial habits is absolutely huge if you're trying to plan on building wealth over time. These are just some of the things that I do. I know there's a lot more out there. And if you do know more financial habits that you could talk on, please put it in the comments below so that other people that are watching this video can see some of the things that you can do to grow your wealth every day and become financially stable. Thanks for watching the video. Please like and subscribe to the channel. It helps me create more videos. Talk to you soon.